welcome to this very special roundtable where we talk about our experiences as an editorial team when we reached out and tried to understand what Bharat wants from this year's budget. Now, over the years, a lot of coverage takes place where you speak to the same regular people, those that are powerful, influential, of course, but we wanted to go to every corner of this country and understand what Bharat truly wants. And to do this, our top editorial team went out to different parts of the country. We're sort of putting that together, what our learnings are, what we found, and what the real pulse is of what India wants. So we have everyone around over here. Guys, this was a fun experience and I think eye-opening. Sometimes just getting out of the studio and understanding what people want is so crucial, isn't it?
Yeah, I mean, 5 of us went to different parts of the country. One person chose to go out of the country and get the budget estimates going.
Yeah, no, but that's a fact. The conversation even in Davos was all about the budget, but we'll talk about Bharat right now, and truly Bharat.
No, so why I thought this was interesting was because we split it up between at least 10 or 12 sectors, which were the focal areas, or which likely could be the focal areas of this budget, be it capex or be it consumption. And I think the takeaways from either the management or the market guest who was with us, or a combination of two, really proved to be pretty crucial. Now, not all of this will play out in the budget, of course, but it was nice to get these gatherings and then assimilate what is likely the wish list and then compare it with what actually comes.
And a lot of people had fun. I saw people eating chaat, poha, filter coffee.
There was an interesting cow belly also, as we talk about, you know, Indore is crazy for street food. It's very tasty, and the amount of variety which is there, it's giving tough competition even to Bombay.
Oh, I had the traditional banana leaf and a whole spread. I couldn't eat more than half of it.
Yeah.
Amazing.
No, but then let's just go around and talk about what our learnings were. And Nisha, you went to Bangalore, startup capital. What was the sense there?
So, you know, the pulse of the startup and the entrepreneurial culture is becoming very, very important, because a large part of our IPO market is being driven by these startups. Now, the sense that I got from the on-ground conversations with several of these founders and techies is that they think that they will beat Bombay as the commercial capital of India. Well, I, coming from Bombay, having tracked this for 2 decades, I told them, please don't be so sure. Bombay is far ahead. And Bangalore has a lot to reach when it comes to the public market discourse. But the startup culture and the kind of money that they have generated in keeping India ahead in the tech space is really, really commendable. But they have a lot of issues because they are a new age sector, and a lot of our policy and reforms are not in line with the new age sectors. So they have been trying and lobbying and laboring with the government to get it in line with the global standards when it comes to either ESOPs, re-domiciling, tax benefits, extending the sunset if that particular project has really not culminated in that time period. So these are some of the most important demands that are coming in. But one big demand that was really very clear is coming in from the founders. They also need motivation. They dilute a lot while raising funds to build that company. Then the ESOPs are restricted and doubly taxed when it comes to while exercising and while selling. So all this really demoralizes the founders. We have seen many, you know, altercations about how financial engineering has been done, but they were very candid with me off camera that we will not do any financial engineering if by law, by regulation, we are supported and founders are given those ESOPs by way of law when the company is big enough and going for an IPO to create motivation. And from my side, 2 bits, that even for hostile takeovers to be averted, the founders need to have a larger skin in the game. So that particular support is a very big ask coming in from the startup space.
Yeah, you know, I don't know, in this Bengaluru versus Mumbai debate, and I wonder what our viewers think. I think Bengaluru as a place for new exciting businesses might be pipping Mumbai. So even though we are the financial
But
capital,
understanding commercial and money flow is right here in Bombay.
That is in Mumbai. So
And the information first comes to Bombay, then trickles down to the rest of the country. So I have my biases being in Bombay, and Bombay giving such an important ground to all of us to really grow. It really rewards hard work. And that particular vibe of Bombay is unmatched.
The tech talent density, that is very much important in Bengaluru.
Yes.
And if you have an idea over there, the capital is also there chasing there. A lot of seed rounds, lot of first fundings are happening there.
Yeah, but you know, we need to move away from that debate, because this was a Bharat budget, not a Mumbai, Bengaluru. And that was the idea, to go across. And you went to Gujarat, and we saw those amazing visuals, Neeraj, where you saw a lot of infrastructure and focusing on new energy.
Yeah, you got to see the roads of Gujarat to believe them. I mean, frankly, we've been talking about it for so long. But the focus on new infrastructure, right? And maybe roads is old infrastructure. But if you see Gujarat, and so then I thought of it. Some of the key renewable energy companies, the Adani Group, a lot of Reliance projects, the group that we went to, KP Group, Wari, all of them are housed in Gujarat. So therefore, it was a perfect place to go to speak to the ecosystem. Yes, the company that we spoke to was KPI, and Gurmeet was along with us. And I think for at least the renewable energy companies, the ask was that there are targets that have been laid out. Thus far, we met the targets, but the world is in a drill, baby, drill world currently. Can India stick the course of being or developing the X quantum of gigawatt of energy transition that we have outlined for ourselves over the next 2 years? And the budget, I mean, people largely expect guidelines for the next 2 years, not really the next 5 years. So that was one. And the other ask that came in was that the industry at large, India Inc., will they be kind of not coerced or compelled, but made to stick to the green emission guidelines that they ideally should, for India to meet eventually its target of being a cleaner country? I think those were two simple things that the sector was hoping for.
Relaxation in those guidelines?
No, they were saying that if an XYZ manufacturing company is supposed to use X amount of green power, are they meeting those targets, and can those targets be enforced upon? Because otherwise it's very easy to slip and be to conventional fuel. So I think that was the simple thing. Otherwise, the country's targets are laid out. The budget just needs to run by those guidelines. So that was on green energy and green power. I mean, we did other conversations. I'll come to them. But on energy and energy transition, I think asks are fairly simple.
Yeah, you know, this whole debate we had when Saurabh Mukherjee in our budget town hall sort of set the cat among the pigeons, and he came and said green energy is now an old story, it's out of the window.
And how strongly Ravi came back and said, I don't buy this.
But if you look at the kind of investments that are taking place, it's crazy. And that's going to be one focus in the budget. I think agri is going to be another one, and you saw that up close.
Exactly. Agri is very much important, and luckily I was in Madhya Pradesh. It's technically the capital for soya green and even your grain processing. Now, the thing is, there are a lot of farming processing units there. The first industry I went in was the soya industry. Soya industry itself is now getting rebranded. Soya existed earlier also, but now it's becoming the protein thing. The young folks who want protein in everything.
Especially, so that's the one major source for vegetarians to eat,
Exactly.
right?
For a vegetarian, that's the biggest source. So that itself has picked up. But overall, it has been an agri-processing state earlier, and Shivrajji was already there. So he had pushed in a lot of incentives, and everyone across the state were talking about his policies. That's something which I noticed, and there are larger industries in this space which are doing really well. The volume pickups is happening, but there is a concern. The US markets, they want to actually come into the Indian markets as well. And when they come, remember, they have genetically modified products. And in India, you make it like jo dharti se nikla, the same one.
But it's very clear that India is drawing that red line on the trade deal.
And that is what they're liking.
That's why negotiations are not going.
Trying to understand, what can the budget bring on that?
On that budget front, they're just expecting more export incentives. But that can only happen when the tariff issues are sorted. So that is what the industry
definitely help with that when newer markets open up.
And European Union is something which they are also looking at. We had a conversation after that also. So they are very bullish on. But of course, we need to know what are the exact technicalities for this industry. It's still, you could say, very unorganized.
What is the impact of the GRAMG? How are they looking at that? Because Manrega now has moved to GRAMG. I'm asking from the point of view for the agricultural sector, the availability of labor goes down when you have huge government employment schemes, because people prefer those.
Right.
You know, and then anyone who's an agriculturist then feels the pain. Did you get any insight on that?
Yeah, on the front for the farmers, a lot of populist incentives are coming, but the people in the middle, the processing people, they are concerned because their profits are getting killed, you could say. So the overall ground channel check is suggesting that the people in the middle are seeing big pressure, and that's what actually impacting their final selling prices as well. So initially the farmers are getting support, but the processing people, they're getting the pain.
You know, talking about exporters, you had a ringside view to, I think, the central focus of pain point as far as textile exporters are. And one of the most beautiful pictures with those saris going out. I loved seeing that. I believe you saw a fully gold sari.
Oh, I saw a fully gold, fully silver sari, first of all. And I'm not talking about thread. I'm not talking about jari work. I'm talking about actual gold sari.
You should have bought it, because between you buying it and its value right now.
You're assuming I had enough net worth to buy 5 kgs of gold. I'm sorry. That's quite a bit. But having said that, and you spoke about exports, right? So that Coimbatore, Erode area is known for its textiles and the entire value chain. It's not just apparel manufacturers. It's also the spinners, the guys who supply to this. So this entire supply chain. Now, interesting points. There is an impact on account of tariffs. There is job loss on account of tariffs, but there is simultaneously a benefit that is being found through the GST cuts that have taken place. How? Because the biggest cuts in GST have taken place in non-cotton. So your other material that is used in fabric has dropped from 18% to 5%. And thereby, the maximum implication and benefit of that is to the extent of 13%. So there are spinners that we spoke to, for example, that supply to apparel makers who are saying that traditionally we used to do X amount of cotton. We are now increasing the percentage of blends in that cotton, and that is moving through the value chain as well. So there is a certain benefit that is coming through on that front. It is bolstering their margins to a certain extent.
I have a quick question. Was the talk of the EU FTA already on when you went there, and did they speak about it? No, it wasn't.
No, it wasn't. So at the time when we spoke about it, we're talking about the fact that they need a little bit of assistance. Remember that Coimbatore is known for its MSMEs. There is a significant number of MSMEs in that region, and also the per capita in that region is actually double that of India. So people are doing reasonably well. There is a large IT population as well. And you've seen that. I spoke to people who've said that land prices in that region have gone up 20% in the span of just a year and a half, because real estate prices have shot up.
And Alex, I think the real estate players are also making their way into these tier 2 places.
Yes.
Even in Indore, the plotted land developments are coming up. Chennai also is there, and even outside Chennai also, in tier 2, 3, even Ahmedabad and even Coimbatore, plotted developments have started coming in. So there is an interest.
Real estate, you're
Real estate.
Real estate is
I must say, Ahmedabad, Chennai are not tier 2 at all. I mean, they are now tier 1 and
No,
tier
but
1.
for Ahmedabad,
No,
yes.
but for
Chennai is-
Indore,
Yes.
it's quite stunning.
It was
Chennai is metro city,
Metro.
but I'm saying Coimbatore, 60%, I spoke to a developer, 60% of her demand comes through from IT, which is incredible. So your GCCs are actually setting up in places like Coimbatore.
I agree. Coimbatore, I think even the competition between states, and we had the opportunity to speak to a lot of state governments, the aggression they're showing in attracting GCCs and data centers is incredible. Pune, automobile hub. I mean, they got everything they want. Now GST bhi ho gaya, sab ho gaya. What are they expecting? A PLI scheme now?
Yeah, exactly. They are very happy with the demand side incentives, but one key takeaway from all of the guys, especially auto component guys, was that we've invested a lot in the last 6 to 7 years transitioning from BS4 to BS6, but there hasn't been too much done in terms of the R&D that we've done. So that was one of the biggest takeaways from the budget, that the research and development that we're spending, almost 2%, 3% of sales, is very less compared to the European guys. So it's a little difficult for us to compete with them in India, especially for the luxury makers. So they are not able to supply to them because they're not investing enough.
You know, I think the automobile industry, and I mean, people might not like it if I say this, is one of the most protected sectors
Yeah, it
in
is, yeah.
India. Most protected.
So that's why the
every
the
which
FTA,
way, all
yeah,
of the deals that we
happen, yeah.
sign, they are graded in a way where, okay, you'll be fine for the next 10 years,
Yes.
don't worry.
So 25 lakhs ke niche doesn't come, and in this FTA has been the case as well. But their interesting point was that we need to spend a lot more in terms of R&D,
Yeah.
and for that we need incentives. We don't get that.
Actually, just to complete that point, and maybe you can weigh in as well, the move from BS4 that skipped BS5 and went to BS6.
That was a very big change.
It was a big change.
So we spoke to Endurance Tech there, and they are one of the largest exporters to Europe as well. And their point was that we need those R&D incentives, but we also spoke to the luxury car makers. Now, at that time, the FTA was just starting to happen. That conversation had happened that we are almost very close to signing it. So when I spoke to Mercedes and their management, their point was that we are currently importing parts at 15%, but there is a very high premium range also, that's roughly 5 to 10% of the sales. That gets the high 110% duty. Now that that's come at 40%, they are quite happy because their some key models which were priced above 2 crores, 2.5 crores, went to 3.5 crores because of the import duties. Now that has come down.
How many actual units would this
No,
be?
that would be very less because luxury market is
500,000
luxury market in India, but it's more of the ecosystem. So, for example, Landmark Cars has almost 40% revenue from Mercedes. Now they are saying the actual sale is okay, but the after service is where they have that 18%
margin comes in,
margin.
yeah.
They sell the car, they get
Exactly.
3%.
Yes.
They service the car, it gets 18%.
But apart from this, the entire supply chain which is there,
Yeah.
will that see a bit change also happening because a lot of reliance is there on the China for the luxury markets in Europe.
Yeah.
So will we see some change when
Especially
it
for
comes
the
to Pune?
German brands that operate in India, they import a lot directly from Europe in terms of the parts because they have 15% duty. But now that is starting to change a little bit because Endurance as a company is also present in Europe with acquisitions. So I think that was one of the key aspects that they highlighted that they really want to look at that. And the other very quick point was equipment. The parts that they make, they need a lot of equipment which is imported in India. Now if there's a war in China or if there is some restrictions in China, and the auto companies can't import that machine in India without having to go to the government. And therein lies the problem for them.
War in China, I know.
No, not war in China, but war in
Europe,
any restriction like the rare earth happened. So they were saying that whenever something like that happens, we again go through the government, we want to import this machine, give us an approval. And every time they are not able to do that.
You mean a trade war kind of situation?
A trade war kind of situation,
No, supply chain constraint has been one of the biggest problems in the last few years. And for entire corporate India, there will be two very important aspects. More indigenous manufacturing. We have seen semiconductor, EV, battery, rare earth, all of that being given some bit of boost. A lot more of that. Private capex picking up, and the second very important thing is tax dispute resolution in an amicable manner. Government has done a lot, but corporate India to really bridge that trust deficit with the government and have more surety, foreign investors being more certain about India's policy, tax settlement is one of the crucial asks where a lot more needs to evolve and something should be seen in this budget.
This is very important. Just very quick point on this. MSMEs I was mentioning. So two aspects, right? So on the financing side, because in certain cases, working capital becomes an issue when, especially if you're export oriented. So there is an ask to say, can you be given a little bit of help there to mitigate what could be a window of time when there is pain. And beyond that also ease of doing business on the tax side, right? Because a lot of these small entities cannot afford setting up a team or hiring a professional to say monitor this on an ongoing basis because I want to be compliant. I don't want to be punished because I've made a mistake.
No, so if you listen to the last, I think, 5 budget speeches, faceless dispute resolution, the ease of doing business have been all the key words. Now, is it translating or not? I suppose you wanted to comment.
No, just that I think over the last 20 years that I've done the budget, this has been the ask. Ease of doing business, better tax resolutions for both global and local investors. And we just had the Tiger Global case coming up as well, right, in some sense. So, for a perennial ask, how much forward can we move on some of these remains to be seen, but steps need to be taken.
On Tiger Global in particular, there has been an ask that the dispute of any kind, an investigation, be closed in 1 year. Because these funds have a lifeline. And they shut the fund, but they provision that amount for 7 years. It's a loss. So that's one very important ask coming in, that faster resolution, because the fund has a limited life.
And apart from this faster resolution, there is a demand for stability in the policies. Every 6 months, 12 months.
No, but that I think to be fair, because you've had the same government now pretty much for 11 years, you've had clear direction. So some things they have not moved from at all. So, you know, just to round off, and I know we're talking about Bharat, but I think most of the Davos promenade was dominated by Bharat, to be honest. There were constant complaints that Hotel Europe has been taken over by the Indian Pavilion. So just very quickly, of all the key movers and shakers that I spoke to, from the market's perspective, long-term capital gains, relief, reduction, do something to bring back foreign investors and FPIs. That was one. From a lot of bankers, the sense was that, you know, can we just don't do anything, just stick to your fiscal, discipline, which this government usually does. And the other thing is, let's move on more PLIs for defense especially. I think this indigenization theme is going to be the big one. So those are some of the things that perhaps
so defense,
we could see.
Yes, but you mentioned on the long-term capital gains tax, equity has been made very, very attractive over the last many years. Only in the last budget, some bit of taxation increase happened. Now the interest income on other debt, hybrid, and mixed kind of products and funds, which are also important diversified investment areas and funds, they also want tax efficiency and tax being attractive for the investors, because they say that only equity is made attractive, and these come under interest income, which is full income tax that is levied on them, and it needs to be made more attractive. That is one very big ask coming in from the AIF's alternative investment funds, private credit, debt and hybrid funds.
Yep. So, but to be fair, equity has not been made attractive. Equity is actually very attractive at 0%. It's actually gone up to 12.5%.
Yeah, it's made unattractive. And then what has been done with the derivative space also, and the whole Jane Street case also, I'm not saying it's not the right decision at all, but from an FPI point of view, then add that with the currency depreciation.
And in the FNO space also, there's a big kind of, ask not for the traders, but on any expiry day, the amount of volatility which the FIs get. So a lot of trades for the retail, that also gets kind of, impacted a lot. And we are seeing that from the days when it's changing, when the two trading, two closing sessions have come in Tuesday and Thursday.
But the budget can't do anything about it. I think it'll need to be a SEBI decision that comes in at some point of time later. But on the tax front, yes, I know fixed income, real estate, everybody is asking for parity with equity taxation. I don't quite know really. Let's see. But LTCG could be a big one if it comes.
I would say needs it.
I don't for now to reverse the flows.
She's really lobbying for it.
Just to close out, did you guys see markets where y'all went? Because when I was returning home from Coimbatore, I passed through Market Street. It was a Monday evening, and around 7:30, it was packed. It was buzzing. And I was just thinking, is that the case everywhere?
Domestic consumption,
Yes, it was very strong. And I must say, in Indore, the average purchase price, if you must be thinking, it's not around 50, 100 bucks. 200, 300 bucks for a normal food plate, and everybody. And everywhere people are filled, and it was a Saturday and a Sunday, both the days we saw it was fully packed.
Which bodes well.
So I was speaking to Marico, they clearly said that what has been transformational in terms of reforms for boosting consumption is last budget income tax cut and then GST cuts. That has both boosted the consumption pattern across country.
The PLI part will be something to watch, right? But because EMS companies in Pune like Sirma, the conversation, while they are not in mobile, Dixon is very big in mobile, and those are expiring in March 2026. The phone, the PLI that they get for phone, that's almost 50 basis points. Now they yesterday on the call said that we will see, we'll put our foot forward. We want the government to do it, give us incentives after March as well, but the amount that's produced in India already covers 99% is all manufactured in India now. So if they want to get into nuclear PLI amongst others, that'll be something to watch.
This is not the time perhaps for the government to pull the rug.
Pull the rug, exactly.
Under what is working.
Their point is given you enough for the domestic industry to thrive. Now you want more for exports as well. So Dixon right now, and while the stock has done well today, largely the results were weak on this aspect of margins.
Recovered finally.
Recovered finally. So there is that from 2026, what will happen? They don't know. They are hoping for some PLI benefit that continuing in those segments, but it's very limited because he's one of the biggest. 80% of mobile manufacturing in India is one company. So might be other segments that you would want to boost amongst others in electronics.
Okay, so a lot of learnings from the ground, from the entire team coming in on NDTV Profit. But remember, there is so much more coverage, whether you see it on our website, whether you see it on our social media handles, whether you see it on all of the shows that we do. So a lot of granular detail there as well. But our attempt has been to bring your voice together ahead of the budget. And of course, this is the destination that you watch for all your budget news. Thank you so much for joining us.